Howdy there, folks. Welcome into today's video. I want to talk about my plans for the stock market for the next 30 days specifically and kind of what's going on. So first off, if you didn't know, the next 30 days in the market is going to be absolutely insane, okay? First thing that's going to be insane is we essentially have the inflation data coming for this past month. That is going to move the market either up or down in a major way. Everybody wants and needs to see, at least if you are a believer in the market over time, right? We need to see inflation coming down. If we come in at another 8% plus number, it's not good. If the rate of increase even increases to 9%, that's a disaster for the stock market, right? So that's going to be a big, meaningful thing. We also obviously have earnings coming. Basically, almost every single big company out there is going to announce their earnings over the next 30 days, okay? So this is a huge deal. The first companies that are actually going to report are actually this upcoming week, essentially, all right? And those are going to be the big banks. Almost every single one of these big banks is reporting their earnings this upcoming week, okay? Including JP Morgan, which I think is probably the most important of the banks to kind of hear what's going on there. And so they're going to be obviously reporting earnings, telling what's going on in the economy. Now, we've had a couple companies report this past week, actually. WD-40, for instance, reported, and they actually missed on both lines. Now, Levi's reported earnings this past week. Levi's earnings were tremendous. Very strange. Like, revenue was great. Margins were great. Bottom line was great for Levi's. I was amazed. I was like, holy smokes. And so we got to figure out, is there something specific going on with Levi's, or are maybe company earnings going to come in stronger than expected? Upstart on the flip side, right? Which Upstart is a Fintech company. I'm not sure how many of you guys keep track of different Fintech companies out there. By the way, Fintech's been a disaster, but when it comes to Upstart, it's been tough. I mean, year to date, that stock's down over 81%, but, their numbers were pretty weak when they announced here recently. And, basically all the fintechs have been a mess for quite some time, right? And when it comes to these sorts of stocks, there's not going to be any level of comfort in any of these stocks until the market really wants to go risk on again. And the market's not going to go risk on again until the rate of increase of inflation starts coming down. And because once that happens, and it consistently happens month after month after month, then the Fed doesn't have to be so aggressive with not only their actions, but obviously their language in regards to that. Now, big tech obviously is what really moves the market, okay? This is what really moves the needle for the market. And the reason being is these companies are the heaviest weights in the market, okay? Tesla, I mean, even after its huge drop, this is a $779 billion company. Google McDougal is at a $1.5 trillion market cap. Apple's at a $2.38 trillion market cap. AMD's fallen a lot, 45% year to date, but still, that's a $128 billion market cap. NVIDIA's fallen off a cliff so far this year, but still, it's almost a $400 billion market cap. Microsoft's $2 trillion. Adobe's $184 billion. Amazon's $1.1 trillion. Meta's fallen off a cliff this year, right? But still, it's a $462 billion market cap on that one. So when you're looking at these sorts of stocks, these are what's going to move the market either up or down, right? Depending upon their earnings. Now, if we think about those different companies, right? And we kind of go through those and just think about those for a moment, right? Tesla, they're doing everything they can to run their business as flawlessly as possible, but they just have a lot of things that are working against them right now, specifically in regards to Shanghai, China, and everything that's been going on there with the lockdowns and things like that. So it'll be interesting to see where Tesla's earnings per share is at, EPS. We already know their production numbers. I thought it was actually really impressive. When I looked at their production numbers, considering how many things were working against Tesla, I was very impressed. But now we got to see where margins are at for Tesla. Now we got to see where the bottom line's at for Tesla, right? Google McDougal, I mean, they're an amazing company. They're gonna report a solid quarter. I don't think it's going to be out of this world great, but they're going to report a solid quarter. Apple is the one I'm really worried about, to be quite honest. And the reason being is I just think they benefited massively from everybody being at home. And I think that pushed a lot of people to buy laptops, computers, just about everything, when the whole, work from home, school from home movement, I think was a massive boost for a company like Apple. On top of that, all that stimulus money that was pumped out there, right? It benefited Apple in a massive way. Also, you know what else benefits Apple in a massive way? People don't even think about this. People only sometimes think about Apple in regards to like somebody going out there buy a new iPhone. what about all the businesses that spent massively on Apple over the last few years because their earnings were really strong, their business was really strong, it was easy to raise money, right? So why not invest in a bunch of new Macs for your workforce, right? And other different products that obviously Apple has. So Apple's the one that I'm a little concerned about, not only for this earnings season, but also where their guidance is at for next quarter. And also, we've heard Micron already come out, just that was probably a week ago or so, and Micron said they have specific customers that are cutting orders. And we know that Micron and Apple do a lot of business. And so I'm guessing that Apple's next quarter's guidance is not going to be good. It's not going to be good at all, okay? So that's one I really worry about. And obviously, if Apple was to go down on earnings, because it's such a huge market cap, that would pull the entire S&P 500 down, it would pull QQQ down, it would pull down semiconductor stocks, and it would also pull down the overall vibe of the market to even a worse place if you got the biggest big dog, which is Apple, and they don't quite, their numbers aren't quite up there. Okay, so that's definitely a little worrisome there. AMD and NVIDIA, I think both of those earnings, when they announce, which they won't, I don't know if we'll get AMD likely in the next 30 days. I don't think we'll get NVIDIA in the next 30 days. But when it comes to AMD, I think that's a stock that I don't think their next earnings are going to be necessarily great. Not because there's anything wrong with their business model. I just don't think that space is in the best place right now, essentially, okay? Mr. Softy is going to report solid no matter what. That's just kind of what they do. Amazon is going to report solid, but the problem is everybody always has very high expectations for Mr. Amazon, right? Meta's in a good position going into this earnings season. The only reason they're in a good position, essentially, is because now they're talking about cutting way back on hiring. So in terms of the amount of money they're going to need to spend, that's going to go down. Also, let's be honest, the expectations for Meta are just non-existent, right? Company trades at like a 12 PE. The stock is down about 50% year to date, right? 50% year to date. So there's a big divergence between a company like a Meta, right, and a company like an Apple. A company like an Apple is only down 17% year to date. So the expectations for Apple in this earnings season are still pretty darn up there, right? Meta, on the other hand, no one's expecting anything. Everybody's almost expecting a disaster, right? So if they just come in with something decent and it's not a disaster, that stock's ready to make a move up. Netflix, has this same exact situation. I mean, that stock's down 68% year to date. So it's just in a position where obviously no one believes in that. We've talked a lot, obviously, about the small caps, mid caps, and those sorts of stocks. And I mean, a lot of those stocks are just trading at very, very cheap values. So I think guidance will be very important with those companies, specifically in regards to margins, and especially for any of the companies that lose money. I think that's going to be really important. I think Palantir earnings are going to be very, very important for everybody to hear what happens there. I think that's a very important stock for the retail crowd specifically. And I think those earnings really matter much more to the market, for the psychology of the market, than I think a lot of folks really anticipate there. We obviously have all the safety stocks reporting. What happens with margins for these companies? These are big, giant corporations that are well established, but the issue for these companies is they don't have much growth. Like pretty much all these companies that I have on my safety stocks watch list, right? None of these companies have major growth. And so the big question will be, if their inputs are obviously becoming much more expensive, can they offset that with the consumer? Or are the consumers trading down to cheaper brands? Because these are all companies that are brand name. Clorox, I mean, you could buy actual Clorox bleach, or you could buy store brand bleach, right? You could buy Pepsi, you could buy a cheaper version, right? You can buy name brand ketchup, or you can buy the store brand ketchup, right? And mustard and things like that. And so all these companies, it's going to be very important. Now, Kroger recently came out, this was probably 3 or 4 weeks ago, and what did Kroger tell us? Kroger told us that they were already starting to see a lot of consumers go down to like store brands and things like that, okay? Which kind of shows you the state of the consumer. Because if the state of the consumer is like, I don't want to buy Heinz, I don't want to buy the name brands ketchup, I'll buy the cheapest brand that I possibly can. I don't want to buy French's mustard or Heinz mustard or anything like that. I'll go to the whatever the store brand is, whatever's cheapest, right? Walmart brand, Kroger brand, whatever. That obviously shows the consumers in a weakening pattern, right? Where they're like, Yeah, store brands, that's perfectly fine. We can't really do the brand names. So it would be very interesting with inflation going on for these companies. I don't know, man. I mean, a lot of these stocks have already started to fall. I mean, look at a stock like Target. This one I've actually started picking up recently, and I wouldn't mind adding some more shares in my dividends only account of Target. But, to be honest, Target's likely not going to have a very exciting next couple quarters. Just bottom line, when you think about the comps they have to comp against year over year for these next couple quarters, the good news for Target is 2023, I think, is going to be a much easier year for them for the comps. But this year is just a tough year. And that's why Wall Street's trying to get out in front of this thing, even though it's been kind of hard to, right? And just kind of, get off that. So that's kind of going on with the safety stocks there. Travel should be interesting because, if you want to think about, are people canceling cruises? Is anything like that going on, right? A company like Wynn's going to be interesting to see how the high-end consumer's doing. Are they still out there spending? From what I've seen some of the high-end consumers even get a little bit worried, right? And we're going to have to see. I mean, I can tell you, I go to the mall and I see some of these stores like Louis Vuitton and whatnot, and they're not busy like they were busy like a year ago or so. Those stores would have lines out, just people waiting to go in there when all the stimulus money was out there and the PPP loans and all that stuff, man. Woo! I'm telling you, the Louis store, the Gucci store, all those places, I'd never seen those stores that busy in my life. And I've always just kind of looked at those stores and just try to keep track of how many customers are actually in these places. That there was about a 2-year span where I'd never seen those stores busy like that, right? And so clearly there's going to be a massive pullback in spending on a lot of those higher end brands from Louis and all those other ones. Does that boil over to a Wynn? I don't know. We're going to have to see. And also Wynn has to obviously deal with the mess of Macau. Let's call it that, right? So they're dealing with all that right now. The airlines are very, very busy. The issue with the airlines is, they have pilot shortage. They have, oh my gosh, it's a disaster. Even I was thinking about, flying somewhere recently, and I was just like, gosh, man, you hear about all these stories about people, having their flights canceled and pushed back for hours and hours and hours. And I'm like, it sounds like a nightmare to fly anywhere right now. So what does that mean to profitability of the airlines? Obviously, we know fuel costs have gone insane. Also, from what I'm hearing, some of these companies are having to pay their pilots way bigger amounts of money essentially than they usually would. And the reason being is obviously there's a pilot shortage right now, right? So, and then I'm hearing about, tech problems with some of these airlines. That's a messy situation. So that should be interesting to see kind of what happens there. The housing stocks, I think, there's going to be several of these companies that actually report over the next 30 days. I think these are very important companies to all pay attention to. I think even Home Depot and Lowe's, in terms of specifically where their guidance is at. I think with the home builders, people kind of get caught into a problem with the home builders. And the problem is they look at whatever their current numbers are for this past quarter, essentially. And they assume, a home builder had this revenue go up this much, or they had their profitability here. So they assume everything's great with the home builders. You always want to pay attention to how many homes are going under contract. That's going to tell you the truth about the current state of the home market. Because if contracts are very weak, which I think they're going to be for all the home builders, that means essentially people aren't, buying homes, right? And I think that's going to be the situation. I think that's going to add more worries, obviously, to the real estate situation. I think the real estate situation is going to get very real very quickly here. And it's amazing how fast actually the real estate market's turned, because 6 months ago, the real estate market was in such a boom time. Everybody was so excited about it. Prices were skyrocketing. Inventory was still fairly low. Fast forward 6 months, inventories are skyrocketing across the United States. You look at the numbers, it's insane, right? All these home builders, I can tell you that they're, we'll see in these numbers, I can guarantee you they're not having nearly even remotely close to the type of demand of homes going under contract as they were previously. Interest rates have gone up a lot. Consumer confidence has, gone to the lowest pretty much we've ever seen, right? Investor confidence is extremely low now, and now everybody's scared about the current state of the housing market. You add fuel to the fire there, and so I just think those numbers are going to be a disaster for the next several quarters. I'm not playing put options or anything in regards to housing stocks. I just think they're kind of in a tough place, to be quite honest, and I don't see that fixing itself this year. Maybe at some point in 2023 or 2024, but I don't think there's any magic housing's fixed anytime soon, man. When you look at what mortgage rates are at, when you think about how low consumer confidence is, and plus we kind of already had this massive pull forward of demand of people moving and things like that. Yeah, I don't think that's a pretty situation at all. So for me personally, I spent a lot of money in the market this year. Like, I've been deploying capital left and right, right? I would love it if we can get a breather for a bit. I would not mind at all if the market kind of just drifts a little higher and I can actually catch my breath a little bit and maybe cash up for let's say the next 30 to 60 days, okay? Then if we get any major drop, I'm going to keep deploying out there. So the NASDAQ at the lows was down roughly about 34% from peak to trough. And this was as of like 2.5 weeks ago when the NASDAQ hit the lows, right? If we go back down to those levels or even lower, I'll deploy more money in the market. But I would love to just kind of get a time period here for this next 30 days where I can catch my breath a little bit, cash up a little bit, and reassess, see where the state of the market is, right? See if we're going to have this massive recession or if this is going to be a situation where, maybe everybody's gotten a little ahead of themselves and if anything, we're in a mild recession, right? And I think that's the biggest question mark for the stock market is, are we in a situation where we're going to have a great financial crisis of like 08, 09, right? And unemployment's going to go to like 10%, and we're going to have some companies fail that we never saw coming, right? Or is this a sort of situation where, the market just kind of, maybe trends down a little bit, but we've already seen the worst of it, right? And that's a big question. It's all going to depend on the state of the economy, because the state of the economy is going to depend upon how these companies' earnings come in. And are these companies having their revenues not only go up, but their bottom line? Because it's like, well, if your revenue's up, what's the bottom line, right? The market over time trades on the bottom line, trades on EPS, it trades on net income. It doesn't trade on, what companies' revenues are doing. So if a company's revenues go up 8%, cool. But if that company's net income goes down, at the end of the day, that still means that stock has lower to go and the market has lower to go, unfortunately. We've priced in a lot of bad news. The big question is, have we priced it all in or not? And that's going to be dependent upon company earnings and if inflation can actually start coming down, guys. So my plan is cash up a little bit and hope we can get a breather, because this year has just been down in a straight line. So it's like, if you've been deploying, it's like nonstop deploying, and it's like, can I catch a break for just like a few weeks, a month maybe, and cash up a little bit and get ready in case we got another major drop here? So that's kind of my hope. That's my plans. And it's going to be a busy next 30 days in the market. I can tell you that, man. My batteries were a little drained yesterday, but I'm like, I got to get back ready to go, man, because we're about to go into earnings season here. And I got to be ready and charged up for that because, almost all the big companies over the next 30 days are reporting earnings. And we got to be ready to rock and roll for all those, man. A lot of conference calls to listen to, a lot of numbers to look at. And, it's going to be big, guys. So anyways, I appreciate you joining me. Much love as always, and have a great day.